What's up, everybody? Welcome to the newest episode of Demo Day, the podcast for entrepreneurs and venture capitalists, where we demystify the culture of joining one of the top accelerator, incubator, or VC programs from around the world. I'm your host, Sean Goldfan, CEO of Coefficient Labs, and on today's show, we'll be interviewing Yipeng Zhao, managing partner of Embark Ventures. At Embark Ventures, Yipeng invests in the groundbreaking world of deep technology, positioning himself as one of the only Southern Californian funds that invests in the technological breakthroughs that will shape centuries to come. On today's show, Yipeng will walk us through his journey as a venture capitalist, starting in his early days as a mathematics and economics major to launching his very first venture capital fund, Embark Ventures. He takes us through a deep dive into the fund's thesis around deep technology, also known as frontier technology, the current state of edge computing, and why your track record is the biggest asset any venture capitalist can have when growing their fund. Oh, and one more thing. If you've been listening to the Demo Day podcast and love what we're doing over here and want to support, please go check out the Apple podcast and leave us a review. Coefficient Labs is giving away two $10,000 paid acquisition packages, helping startups, VCs, founders, anyone that actually needs help with Facebook ads or Instagram ads. Go over and leave us a review, and we'll choose two lucky people to run a $10,000 paid acquisition package. Without further ado, let's get into Demo Day. Yipeng, thank you so much for joining us on the show today.
Thank you for having me.
Yes. So right before we went on air, started filming, we started talking about how it's really cool in this sort of a podcast environment that we don't have all of the questions completely scheduled and sent over, and that it's more of an authentic conversation. And I think what's really unique about Demo Day is that we bring on venture capitalists like yourself that focus in very particular niches. And I think what's really cool is for startups that maybe have never heard of you guys before, this is such a cool opportunity to hear about your thesis and really what makes you guys stand out from other VC funds. So when you think about the mainstream startups at the seed and Series A level, especially in Los Angeles, you think of e-commerce, you think of media, B2B sales. But one of my favorite aspects about Embark Ventures is that you guys are working on what feels to be an entirely new area of technology. You call it deep technology or frontier technology.
Yep.
So my question to you is, what exactly is deep technology or frontier technology for someone that maybe has never heard of it before? And why is that world so important to you?
Yeah, I mean, deep tech or frontier tech is this buzzword has been around the market for quite a bit, actually, right? If you think about the original Silicon Valley, it's built on literal silicon, right? So at that time, semiconductor is a deep tech, right? 'Cause people never heard about you can actually make a chip with a finger type of space and then get integrated chips into a small chip, right? So it's just impossible at that time, right? So that's how basically venture capital started. It's based on deep tech, right? But people don't talk about the deep tech, right? Just because it's no e-commerce at that time. Everything is deep tech, right? So deep tech started become a thing because of I guess a lot of the mobile tech companies start coming out, a lot of more SaaS companies coming out. I guess the traditional tech investor are more and more, I guess, diverse. So people try to find their own niche, right? And that's why the term deep tech started, I feel like. It's people to try to find their own niche, right? So for us, the deep tech basically means disruptive technologies, right? So meaning the tech actually has some defensibility first, but also truly disruptive. Right, meaning it's truly unique in a sense of technology angle, right? So if you look at a company in a three different way, right? It's a technology, there's business, and it's also market, right?
Okay.
So for us, business angle, which could mean team and business model.
We're talking about defensibility right now.
It's defensibility, right? So I mean, business and market wise, that's basically most people looking at. Even us, we look at business and market all the time, right? But for us, our uniqueness, we also look at the truly defensible technology aside from business and market.
Now, I was going to ask you this a little bit later, but I think now is a great time. what does it mean to be a defensible business, and what sort of traits make you a defensible startup?
Yeah, so I mean, like, that's what I think. Like, there's a couple different ways to define this defensibilities, right? One part is because of team, right? Obviously, right? And another part is because of market skill, right? So marketplace, you have a skill of economic of skills, right? So network effect, that's not a defensibility. So for us, aside from all this other stuff, we look at the technology defensibility, right? Meaning, whether it's from IP standing point, intellectual property, legally you can protect it, or actually from years of research experience based on this technology, right? So, and that makes it unique in the sense of it's not only a network effect, but also from an IP standing point, it's actually defensible, right?
Now, I visited your offices here right in the heart of Santa Monica. I mean, you couldn't be more in the middle of Silicon Beach. Yep. But were you born and raised in Los Angeles, or did you come to this town or city at some point in your life?
Yeah, so I was born and raised in Beijing, actually, in China.
Wow.
And then I moved to Southern California for my PhD. So I was doing my PhD at UCSD, actually, in San Diego at that time.
Now, take me back to China for a second. When you were growing up, what sort of hobbies or what sort of things did you do when you were really young, elementary school, middle school?
Yeah, so I would say, like, I was always a nerdy guy, or I was always like a geek. So I guess my whole hobby was actually math when I grew up. I was always a mathematician. I studied math. My PhD was I was working on my PhD in statistics, which is basically a branch of math. So I would say, like, my hobby is a little unique. I actually really do enjoy math. I do really enjoy abstract thinking. So I think that's I was always a sort of like a geek and nerdy guys and stuff like this. But
if I was to talk to some of your early teachers, how would they describe you back then?
I think I was a cool kid, but also a geek. I was truly a geek at some level. So.
Have you ever thought about, in hindsight, why you were so interested or passionate about math at such a young age?
Yeah, I mean, like, I think for me, math is such an interesting subject in a sense of it's a purely, it's a truth, to be honest, right? Like, it's only a subject where you can logically make argument, and it is the thing. No matter which university you're in, the math is only truth, to be honest, right? So there's no argument around the math. If you finish the proof, it is the truth, right? So it is the only definitive argument you can make.
Now, were you like entrepreneurial and business savvy when you were in high school, or did that come later on in life?
Yes, I would say I was actually born in a very entrepreneurial family. My dad was actually a tech entrepreneur in China. He was actually one of the first generation of e-commerce entrepreneur in China.
Oh, wow.
In fact, he actually built one of the first e-commerce site in China. Actually, I think before Alibaba or whatever. But I mean, obviously, he's not Jack Ma or just FYI. So he's not successful, but he was an entrepreneur. He's successful in his own way. In the sense of he's actually very visionary in terms of knowing what to build. But again, talking about venture, he's too early. He's too early for e-commerce to be successful in China, right? But I was very, very much affected by him. So I would say I always interested in learning about business. I always like to read about it. I always like to. I would say that's part of the reason why I started getting more and more into venture is the intersection between science and finance. Right, it's probably the only industry where you can actually work with both scientists and also finance people. Right, so it's just such a cool intersection between really finance and scientists.
So when you look at your LinkedIn, now I know you came and got your PhD at UC San Diego, but it also says on LinkedIn that you went to Michigan State University. And so you had an undergrad in economics and math.
Yep.
And so my question to you is, now that you are a VC and you can reflect on your learnings and your life over the past 10 years, would you have done things exactly the same way as far as the major that you took? Maybe said another way, if you are a freshman or a sophomore and you want to someday become a VC, do you recommend economics and mathematics, or do you think there's a better path for them to take?
I mean, to be honest, I think to be a VC, you don't really need to learn any major. I mean, any major can be a good VC, right? I mean, you have a great venture capitalist study history, right? I mean, you have a great venture capitalist study chemistry, right? So I mean, venture is really a people's game, not a math game, right? Even though I love math and love science, but really VC is more of art than science, right? So I mean,
in what way?
In a way of you can't really qualifying, you can't really give a assign a number to people, right? You can't really predict the future. We don't have a crystal ball, right? So it's unpredictable business, and it's really a business of knowing people, right? And knowing the right people and actually making the right move at the right time, right? So it's more of art than actually a rigorous science, right? So that's why, no matter what type of subject you study, you could all be a good VC or good entrepreneur if you actually wants to work hard in the industry, right? Wants to spend time and wants to actually, getting all the data points and stuff like this, right? So
I couldn't agree more. And I think we're going to spend some time talking more about the types of founders you look for and the qualities that make a good founder, in your opinion. Before we get there, after school, you got into your first, what seems to be a global investment firm at ZMXY, Global Investment, where you were really in charge of the U.S. office and kind of bridging between China and the U.S. markets. Yep. So my question to you is, did you always know that you wanted to someday start your own VC fund, or did it come later on?
I would say it definitely comes later on. So I guess my thought process, my experience is very different with a lot of other VCs. I was doing my PhD at UCSD, and I actually couldn't finish it. So partly because it's getting so freaking boring. And I don't know, I'm not really smart enough to actually get a PhD in statistics or econometrics, whatever we call it. I just feel like personality-wise, I'm not a good fit, right? So I actually quit my PhD program and moved to LA. So at that time, obviously, I was finding my next opportunity, right? Finding my next job, right? So, ZMXY Global Investment is a multifamily office based in Hong Kong and Beijing. So they actually, at that time, was setting up the office in LA. But it's really I would say it's really an adventure for me because I never actually worked in an investment firm. And that's really their whole LA office, right? I mean, it's 3 people. It's basically small. Their firm in China might be big, but in LA it's like three people, right? So that's where I, took the job to just basically start learning about what investment means for me. But I never thought I would actually get into venture, to be honest, because at that time it's a diverse asset class firm, right? So they not only invest in venture but also invest in real estate. They actually have a very small venture portfolio, right? And most of their portfolios in public equity in Hong Kong or China, and also private equities as well. A lot of lending asset, a lot of fixed income. So this is actually a very diverse asset group. But I guess for me, my learning is really learning the difference between different asset groups and basically hands-on different investment theses, right? So, and for me, during that process, one of the most interesting assets I found is venture capital asset, which, to be honest, is actually least liked asset in the firm's view of the point of view. It's extremely high alpha, and historical return is not really great for venture capitalists, right? If you look at the data of venture capital return, it's not that good, right?
Yeah.
If you think about it, right? But for me, I found it most interesting, right?
Well, I have a question about that because it's really interesting because on one end, you were such a you love math because that is the truth. And then on the other side, you have startups that are so risky and can fail at any given time. It's so art and it's so creative. Do you think that, what is it about startups? Is it the fact that your dad was involved in that world, or what do you think gets you so excited about this, this industry?
Yeah, I think for me, it's the thing really truly intrigued me is the innovation happening in the space, right? Because I think venture is not only about making money. I mean, it is about making money at some level. So you want to, I want to make money for my investors. I also want entrepreneur doing well and make money. But I truly feels like venture or tech in general is the only way we can truly disrupt people's life, right? Like, we can doing stock exchange, we can buy fixed income asset, whatever, but it's not going to affect our daily life, right? You don't care about S&P 500 index at some level, right? But you do care about your cell phones, right?
Yeah.
You do care about your apps, the Uber app, for example, right? So it is only industry where you can actually truly affect people's life at some level, right? With little leverage, actually, with very little money, right? Because at this stage, you can have a couple $1 million and truly have a disruptive tech that could affect generations of people, right?
Yeah.
That really intrigues me. Yeah.
So now, as you're sitting at your desk, you're building this business in the U.S. You're trying to help really grow this for them, outside of their local industry. What was going through your head when you decided, what, I'm ready to move on. I want to start my next thing.
Yeah, I mean, it's sort of like just it's not like there's no like one point of time like, hey, I'm gonna do a venture, right? It's really a sequential thing, right? So
okay.
For me, it's really I think I'm the point, during working with them, at the point where I feel like it's probably the right time for me to actually make my own investment decision versus working on other people's behalf. And I feel like it's also the right time for us to me, also I met my partner and we have a chance to pitch other LPs, right? So it's more a sequential thing. It's not like happening one day or one night. It's really a sort of gradually increase the probability for me to actually be able to start a venture fund, right? So
now the next question I have is kind of for people that are sort of in your position or were in your position. They're a senior executive, they're a director level at some investment or private equity, and they, just like you, have been slowly building up to the point where they're ready to make their move. What advice do you have for those executives that are about to start their very own venture? If you were to do it all over again, would you do the exact same thing?
Yeah, I mean, it's only one way to do it, right? It's to basically know your LPs, right? Know more LPs, right? So I think my advice or not advice will be, first, you have to truly love the job to be able to start your own venture fund. Because I mean, without you probably know it's not an easy job, right? It's one of the hardest job ever, and it's also one of the, I guess, the longest feedback loop ever, right? So it's literally you never know anything until 10 years.
So,
right? Yeah, sorry.
No. The question that just came to my mind was, so many people look at VCs, or at least my interpretation is that so many people look at VCs and they're probably listening to this saying, Yipeng, how could it be so hard? All you're doing is giving money away. And so when you say like it's one of the hardest jobs, what are the sort of, what are some of the hurdles that you face that maybe the normal entrepreneur or person doesn't know about?
Yeah. I mean, I think that's sort of like a common, not mistake, but common thing about venture is such a fancy job, right? Like all we do is to meet people and just like, hey, write a check. Hey, here's like $100,000, here's $1 million, or whatever. Go for it, right? I mean, I wish it's that easy, to be honest. That'd be awesome for me. But I think the truth is, venture capitalists, especially general manager or GPs, it's a weird position, right? Like if you think about customer, like if you're a startup, you know your customer. Right, your customer is your people buying your product, right? So, and for venture capitalists, our customer is not that well defined, right? So, like if you ask a venture capitalist, like, who's your customer? Like, I would say I would be like stubborn to tell you like what's really my customer. Like, I have so many customers I have to satisfy, right? For example, I have to satisfy my investors, my LPs, right? Which they like literally gives us millions of dollars, right? It's not even a joke without any product.
Yes.
Like, and that's why like raising venture fund is 10 times harder than raising a seed funding or Series A funding, because you guys at least have a product, right? You guys have like, hey, I'm selling this cup.
All you have is your reputation.
Yeah, give me $1 million. I'm selling this cup. And if a venture capital goes there, it's like, here's my track record, or here's my reputation, right? Here's my thesis, right? Which, I mean, it's a thin air, right? It means nothing, right? So you have to literally pitch out of thin air.
And
so that's one thing.
And in some situations, right? Like I was talking to these guys about how, just how VC works in general. And you have, like for you guys at Embark, for example, you launched with around a $45 million fund.
Yep.
So you are, basically going out, getting all of these investors to put, $100K, $1 million, whatever the dollar amount is. And so you have this $45 million fund, but the goal is to grow that to $400 million or
hopefully eventually,
right, over that 10-year period. And that I was saying to them, unlike a startup where if it doesn't work, you just go and start another business. When you're a VC, you have one track record and your LPs won't invest again if you don't bring those returns.
And it's kind of, you're right. And at some level, we have one shot, right? It's like if you really deliver a shitty result on your first fund, I mean, you're dumb, right? It's like, as I said, like venture fund is really purely based on track record and reputation, right? You have no product to sell, right? So if you get a bad return, nobody will believe you anymore, right? So,
do you remember what it felt like for you after you made your very first investment, knowing that your reputation is so important?
Yeah.
What did it feel like for you? Because you don't have that much control. You're helping and giving advice, but really you're not in the weeds. So what did it feel like for you once you started to get into this world?
Yeah, I mean, this is great. It's an interesting question. At first investment we ever made, we actually feel super nervous because it's actually happened to be the biggest check we ever wrote so far. Actually, that's our very first investment for Embark. So we actually wrote a $2 million check into a company. That's our very first check.
Do you remember the story? How did you get introduced to these guys?
So my partner led the deal, but my partner actually knows the CTO for 10 years.
Okay.
So he actually knows the CTO like very, very well. And the CEO was a serial entrepreneur, sold two companies for more than north of $100 million. So very strong CEO, a great CTO. My partner knows the CEO or the CTO for like a long time. Amazing technology, truly disruptive technology in a huge market. I don't know if I can tell too much about it or not.
Sure,
but,
sure.
You know, it's a great company. Hopefully, it's a great company. But you know, it's definitely a lot of struggle for the write your first check, right? So it's always, you know, it's like your first kid, right? So you always want to, you know, make sure it's perfect. But
do LPs have the same expectations of the return on their investment in the deep tech, in the frontier tech world, or are they willing to wait longer, knowing that AI or robotics may not happen in the next 5 to 10 years?
Yeah. I mean, you know, for sure. I mean, our LP has to be a little bit more patient than some of the other LPs, right? But I would say in general they are similar because I mean, it's not like SaaS company can just magically make money in 2 years, right? So I mean, venture as a whole asset, whether it's deep tech or general SaaS or e-commerce, it's going to take a long time, right? So whenever our investor is, it has to be at some level patient, right? So you just don't have a lot of freedom once you start investing in venture because it's fully locked up. It's illiquid at all, right? It's private companies, right? It's not liquid at all.
So having a highly defensible startup seems to be like one of the key, pillars or milestones of Embark. Let's talk a little bit more about the founders that you invest in. So while deep tech or frontier tech is at the forefront of your investment thesis, really there's 3 specific types of investments that you're making. Cybersecurity, automation, and healthcare. And then I'm sure there's a couple new ones as well. When these founders are coming to the table, what are the qualities or traits that you're looking for that right off the bat, help you decide if this is someone you want to invest in or not?
Yeah. So, I mean, that's a great question, but the answer, I guess, could be very long. Obviously
we've got time.
Yeah,
we've got time.
I think for venture capital as a whole asset, especially early stage venture capital, team is always the number one thing people look at, right? If you ask sure, there's a lot of people who actually sat on your podcast probably talk to you the same thing, right?
Yep.
Team is always number one. Like same thing for us, right? Even though we call us deep tech fund, we still think a founder is number one thing, right? Like let's say Elon Musk for some reason wants our money. Like no matter what he does, I will put money, right? It just happened, right? The team is just still number one, right? But for us, just because there's no perfect person in the world, right?
Yeah.
So I think for us, we always look at a balanced team in a sense of the team has to have both technical and also business. Technical wise, I mean, obviously we look at the rock star scientists or engineers, right? So if it's, for example, we look at some of the, high performance computing companies, the material companies, all that stuff, the founding scientist team has to be the top 1% quantile in this research field. Right, that's the golden rule for us, right? So meaning it cannot be a mediocre scientist, right?
It has to be world class.
It has to be like a world class scientist, right? I mean,
the top 1% of the 1%.
The reason why that has to be the case is because, as I said, technology is defensible, IP is defensible only on paper, right? It's really the technical know-how behind the IPs that is truly valuable for the company. Right. No matter how many IP you file, no matter how many trading secret you claim you have, end of the day, it's the people who behind these IPs that truly matters, right? So that's why for technical people, there has to be a top tier scientists or engineers, right? So that's number one. And for business side of the game, we are just like any other VC firm, right? The business is business, right? No matter how deep your tech is, no matter what type of different tech, fancy tech you talk about.
Does the market want it?
Does the market want it? Do you have people to sell it, right? So you can have a super fancy technology and super fancy researchers, professor from Caltech, whatever, but nobody wants it, right? It means nothing, right? So there has to be someone on the team that knows business, hopefully sold business before, serial entrepreneur, or at least has very good business sense.
One of the questions that I was going to ask later on, but I feel like now is a good time to do it. So one of our team members asked me this question, and he said, that company TheraKnows has been all in the news, right, over the past, the book and everything. And he was saying, Yipeng probably meets lots of companies that are audacious and passionate, and they know where they want to go. He asked, how do you avoid getting TheraKnows?
Yeah. I actually expecting to ask this question because we got asked this question all the time, right? Like we actually have a diagnosis company in the blood diagnosis company space, right? So people ask us all the time, right? But for me, obviously TheraKnows is a very extreme, example, right? I mean, there's not many TheraKnows out there, right?
No.
So, it happened once, right? But obviously people tries to over-exaggerate negative news,
romanticize,
right?
or vilify, or get the media involved.
Yeah. But I would say there's a lot of red flags on the TheraKnows deal, right? If you think about it, right? So, for example, we will never invest in founders who doesn't want to talk about technology, right? There's nothing secret about your tech, right? Especially founders who truly secretive about their technology, doesn't want to show us any papers, doesn't want to show us any patents, or doesn't want to show us anything, right? I mean, that's typically a big red flag. We will just never actually touch these guys. I would say the number one thing about pitching venture capitalists is to be open, right? So if they are so secretive about everything, right, it's neither they're not confident to themselves, which is not a good thing anyway, or it's BS, right? So that's the number one. And also we try to leverage our network of tech expertise and scientists as much as possible to validate if it's real or not. Right. So, to be honest, that's actually not hard most of the time to validate the tech is real or not. Because you can most of the time figure it out just by asking some,
pointed questions
and ask, we have a network of expertise, professors or other people who can actually help us do diligence. It's actually not easy, not hard to actually find that out.
I would have thought that, because I've heard so many VCs say if you try to get us to sign an NDA or you try to do, it's that is kind of a red flag, or it's sort of unnecessary. We see so many deals, it's not the right fit. But I would imagine that in your world, that's what the entrepreneurs would want, because they're coming to you with, such biotech, or you're saying that, even for the most scientific front-facing technology companies, they need to be open with the investors if they expect to get invested in.
Yeah, we don't sign NDA, same thing. I mean, I think one thing I want to correct is, asking for NDA is not a red flag. It's merely the fact that you're not that familiar with the industry, right? So I don't think
explain that a little bit more.
Yeah, because I think Bradfield has a great blog post about why ventures don't sign NDAs, or why VC don't sign NDAs. I mean, I think a lot of them, it depends on, selfishly, venture capitalists has so much legal liability once we sign the NDA, right? So legally for us, it's just a pain in the ass to sign the NDA, right? So we see so many companies. And we see so many competitors to your company, right? Every company, we will see at least 3 or 4 competitors in the same year, right? So it's just it's so much legal liability for us. Nobody wants to take that liability, right? So it's just unreasonable ask to a VC, right? So I think that's number one. There's a couple other questions, you can read on the blog. I don't want to go one by one, but that's number one thing. But also, realistically, no VC will steal your IP. Even you give me your IP, I don't know what to do with it, right? Our job is to invest in a company and get a little bit of shares, right? So, and hopefully make money, right?
Meaning, sometimes entrepreneurs have these conspiracy theories going on.
Yeah, we will never steal your IP and start our own company, right? It just makes no sense, right? So, and most professional VC will not, give your IP to other people. And to be honest, if it's actually a patent, it's protected. You should be able to give your patent, the book, to your investor without doing anything. In fact, you should give us a number and we can search it on the database, right? So
it's almost like a B2C company giving you access to their analytics. Show us the data.
The same thing with, if it's a scientific paper you publish, just sign us a paper, right? The paper is literally published. Like you just give us a link, we can just click it, right? So it's nothing secretive about it, right? So
in your last podcast, you referred to Embark as a Southern California-based fund, mainly in LA, Santa Barbara, Irvine, San Diego. My question to you is, do you think that level of focus and specificity is a benefit to you in your investment thesis or a hurdle to your thesis?
I mean, I think to look at that, I would say overall it's a benefit just because we are the only few firms in SoCal that are actually doing deep tech. But I think short-term wise, it could be a little hurdle, a bottleneck, just quite frankly, because, I mean, first...
There's so many people working in business.
So many people, and there's not many entrepreneurship going on in the science community here, right? Versus Bay Area. I mean, Stanford and Berkeley, these two universities, basically spin out, I don't know how many companies, but countless, right? So we are here, we don't have enough education around, entrepreneurship among the science community, right? So I mean, there's a lot of entrepreneurship education among, other business, but among the research community, it's not much, right? We don't have a lot of people wants to spin out their tech, research work, right? So I feel like short-term wise, we could have some problem, but again, we are based in SoCal, but we don't 100% invest in SoCal, right? We also have a Boston partners, right? So we invest in Boston company, for example, right? We have Austin companies, right? So I mean, we're open to do other spaces, but I would say other locations. But I would say overall, in the long term, we will try to focus in SoCal as much as possible.
Now, we talked a little bit about, you want to see a very diverse team in that they should have both business and technological founders or co-founders. At the seed level, you're way more willing to make investments just on, the team itself and the idea. But as they start to grow and they become more of a Series A and they start to bring on real employees and real, overhead, what do you think makes the best team culture or dynamics when it comes to building a deep tech type business?
Yeah, I mean, I think it's the same type of company culture just as any other startups, right? So it's really case by case, I would say. Right? It's hard to have a company culture that fits for every company.
Yeah.
Right? So I would say it's really the chemistry has to be fit. Right? It's the whole chemistry, not only the culture wise, right?
Which is typically maybe tied to the mission or the why of the company itself.
Yeah. And I would say, even at Series A, it's still early stage, right? So does the company, as you said, like, can all the team have the similar goal? I think if you put that way, it's like, do they have a similar goals, right? So I think that's one thing.
Are they rowing in the same direction?
Are they rowing in the same directions, right? And also, I mean, can the I guess the founder or hopefully the CEO at the beginning, can they actually manage a bigger team, right? In the future, right? So I think that's a challenge, right? I mean,
because some of your early stage founders are scientists, or they don't really have a managerial,
or like they managed a small team before, but they never managed a big team, right? So, and can they actually manage the culture in a big team versus a smaller team, right?
Do you have a point of view on what qualities or traits make a bigger team leader or a bigger team CEO, more successful than? I guess the question is, what traits make up a CEO at a bigger company that you need to bring with you that maybe you don't need as much of in a smaller company?
I would say, I mean, it's a good question. I would say, at the beginning, you need an innovator, right? So meaning, you need someone who can innovate and make new things, right? And at later stage, you need an integrator, right? You need a CEO or an executive to integrate different functionality of people, right? So for me, I feel like the great CEO of the later stage is the integrator. Or maybe not later, let's say like later, like a little bit bigger companies, not like Fortune 500 companies, right? We talk about different level. I mean,
over 20 employees.
You need an integrator, meaning you can actually identify who's best for that particular use case. And not use case, I mean the particular department, whatever, and then integrate them together, right? So I think that's the one of the biggest trend we actually look at.
Now, this podcast is called Demo Day because a lot of early stage startups are discovered at these demo days. But it's really been interesting to have conversations with VCs because there's so many different point of views on demo days. When you think about the concept of demo day, going to see a group of startups pitch to a big group of investors, do you see that as a good add value use of your time, or do you see it as a distraction that you try and avoid?
I try to avoid, to be honest.
Yeah.
I mean, I don't try to avoid. I think it's good thing for me to go to network with other VCs, to just have a general conversation with other VCs and other people in the community. Like I go to the, YC demo day, I don't know, like Techstar demo day, some of the big demo days, but not really for looking at companies, more for, network with investors and other people in the network, right? Or
what do you think is the biggest problem with the current way demo days are today?
I mean, I don't think it's a particular problem. I think the challenge is always you just can't really pitch a company in 2 minutes, right? I just don't know if it's possible, right? Like if now you tell me amazing founder to pitch their idea in 1 minute, I mean, do you think it's possible? I don't think it's possible, right? Like it's just impossible. And all the and I think it's a waste of time for the founders because all they do is to practice this 2-minute pitch.
When you're gonna go in and drill them with,
which is like it's meaningless in the sense of like, why do we need this 2-minute pitch? It tells me nothing, and you have to practice this 2-minute pitch, right? For me, it makes zero sense because I'm I think for you for founders, there's a lot of stuff more important than practice the 2-minute pitch, right? So
going and get clients or going direct.
Yeah. So like I just feels like it's a waste of time for the founders and also for the VCs. Like, I mean, listen to 100 2-minute pitch means zero things for me, right? I would just rather read through it and just see the little blurb, right? Like, because for me it's different. It's no different seeing the blurb or listen to 2 minutes pitch or even 10 minutes pitch, right? To be honest, right? Like even 30 minutes pitch.
Because you're spending so much time in due diligence for the companies you're investing in. That 10 minutes could be used doing so many other things.
Because to be honest, like 99% of company, we know it's a pass. Just look at the blurb, right? And we don't really need to listen to the 2 pitch. We can know it's not a good fit because of thesis or because of whatever, right? So, and the rest of the company, we truly want to take a pitch. We do a real pitch. We do like a
real sit down,
sit down and let have a deeper conversation. It's not about flicking through the deck. It's really about having a conversation. Back to the people's game, right? It's really about know the founders versus knowing your pitch deck.
So I want to stay on that for a second. So let's throw the demo day out, and you were to meet a founder. When you're talking about having a more deep conversation, what are the sorts of things that you're looking for in a more long form interview of a founder?
Long form I guess like the not much like an interview, but more like a conversation. Yeah.
What are you looking for?
Yeah. I mean, it depends on how many meetings we had before, right? So if it's first meeting, we typically went through the founder's background.
Okay.
And then we do a little pitch, basically go through the business model, technology, market, all that stuff, and really go to the deep of. I would say for me, I really like to learn why you start this company, right? I mean, I think that's where the good starting point, right?
That's what the goods are.
That's a good, like why start this company, right? I mean, you get all different answers, right? I mean, I just want to make money. I think it's valuable or whatever, right? I mean, there's a lot of different answers, but it's not really about the answers. It's really about how you answer it. Right? It's really about how you interact with the investor and how you actually present yourself, right? So, again, like raising money is not a high school kids taking tests. There's no standard answer to every question we ask.
Yep.
Right? All we do is just assess you as the founder versus, hey, there's a question, you have to give me this answer in order to pass, and I will give you money, right? So it's not like that, right? So,
which is why it's such an art, like you're saying, the art of people.
Yeah, because like I mean, I think that's a lot of questions I ask, and then but if we go to deeper, meaning like after the first meeting, we get to know you a little bit better, and we get to know your technology a little bit better. And we typically have our own diligence a little bit, market sizing, competitive analysis, all that stuff. And then later on, when we go into deeper diligence, we would actually go hardcore in terms of technology. We would actually do technical diligence calls. We would have our partner to actually have call with you. We would do reference. I mean, there's a lot of stuff we do, right? But I would say the first one is typically just know you better. And we always like to, I would say, get to know the CEO a little bit better aside from business setting. Meaning we take them to lunch or dinner, just have a personal conversation, right?
Yep.
So, it's I mean, people saying this all the time, but it is like a marriage. It's like dating and getting married, right? I mean, and it's actually worse than marriage, so you cannot really divorce each other, right? I mean, like once you take the investor's money, like you're literally on their cap table forever. So I'm on their cap table forever, so you cannot really divorce me, right? So, and I cannot divorce you as well, right? So, in that case, we want to be able to make sure we have a good chemistry with the founder.
Yeah.
So,
Which is really interesting because you said something on the 1 Million by 1 Million podcast. You were having a conversation with the host, and she was talking about just like what the gap is between seed and Series A. And, it kind of got to the point where you were saying, there's so many there's so many VCs that are willing to write a seed check. But once you get to the A level, not all startups are built to be, Series A or VC backable businesses. And you said something that was so interesting. You said something to the effect of, if startups at the seed stage or even pre-seed are going to take VC money, they need to understand the consequences of going into business with VCs. So in your opinion, what are the consequences that unexperienced founders can run into that maybe when they take VC too early or they're not the right fit? What are some consequences that VCs maybe or startup founders don't know about when working with more traditional VCs?
Yeah. I mean, I think I talk about this in different panels or settings, but number one thing is the VC is, I guess, a good analog is jet fuel, right? It's a fuel for the jet engine.
Jet fuel.
Yeah, it's a jet fuel for your jet engine, not for your car, right? So if you are a car, you cannot put gas engine in your car, right? So you'll just explode, right? So that's why if you take venture money, you have to grow fast. You have to burn money. I mean, which is bad in some sense. You have to go basically chase hyper growth, right? And that's not everybody's comfortable with that, right? 'Cause a lot of people wants to be lean and wants to, don't want to hyper growth, right? They don't want hyper growth, right? They don't want to sell for $1 billion, right? So they just don't have a cash flow business, right? But for venture, I just talked with, I was having a coffee with another VC right before this. People call it zombie companies.
Zombie companies.
Yeah. It basically is like it's undead, but it's kind of dead to us, right?
Yeah, you were.
It's a weird concept, but it's really it's undead companies where it's meaningless for VC. But maybe
it's hard to get. You can't get away from it.
You can't get away from it, right? And that creates a lot of tension on the board and all that stuff, right? So that's number one thing, because you just have to go to hyper growth. And also, you have to manage the board at that time, right? I mean, if you don't have any outside investors, you and your co-founders are the only people on your board. And in fact, only people on your executive team, right? So, but once you start taking venture money, you will have venture people or VCs join your board, right? And you need to have board meetings. You need to have a governance, right? So, are you comfortable with lose control in the future, potentially lose control in the future, right? Are you comfortable with kicked out by VC in the future, right? So which is something you should think about, right? So and to be honest, it's not uncommon. Right?
No, it seems more common than not.
Yeah, because I think that's I guess also expectation wise, VC has high expectation for the founders, right? If you are not doing well in terms of our standard, you might have you might just have a very bad relationship with your founder, with your board, right? And in that case, I mean, it just creates more and more tension. It's not really healthy for the company at some level, right? So it could actually drag the company to death. Right?
And it's just not good for and you were talking about how there are so many kind of either self-funded or they've got a little angel or some friends and family. They're profitable, they're happy, everything is great. But once you take venture capital, real VC money, they want you to be a jet. They want you to spend that money as quickly as possible.
Because they want to show you can hire people, show you can grow the business, not let's slowly grow. And because in our eyes that's ridiculous, because if you slowly grow, other competitor might just catch up, right? So. But in your best interest though, because you can actually become profitable, right, and making a little bit of money for your family, right, and sell the business to like $10 million, right, which is great as a founder. Yeah. But as a VC, like if you sell the business for $10 million, it's a loss.
It's a fail.
It's a fail, right? But if you never take any venture funding, $10 million is actually quite good, right? If you think about it, it's like $10 million. So I mean, it's a lot of conflict of interest, to be honest, right? So. You have to be okay with that.
So without digging too deep into any proprietary data informations companies, what trends in deep tech are you most excited about right now? Maybe a kind of a follow-up question to what you're most excited about is there any sort of technology that you've been seeing or that you're able to talk about that will totally blow people away in the next 2 to 10 years?
Yeah, I mean, totally blow people away is an interesting way to put it. But I would say, I'll just give you some example of the companies we invest in. I think it's cool. So, for example, I really like application of new high performance computing method within application of other industries that people never thought about. For example, we have a company in Boston that are using machine learning and AI and also high throughput robotic screening to discover new materials and help other firms discover new materials.
What kind of materials?
Any materials, chemical materials, right? Whether it's a biopolymer, green polymer, or I don't know, biopolymer, or some random stuff.
What
right?
would the use case be, or like how, is that would be used by a consumer? Or
Yeah, I mean, you discover material for example, for GE, right? Whatever other companies, right? And they use the material you discover to their, I don't know, airplane or whatever, right? So. But in materials using everything, right? I mean, like this is basically all materials, right? So, but the cool thing is not only about materials, it's about the advancement with AI and machine learning. You can actually discover material way faster than basically 5 years ago, right? Because the scientists for last 200 years are discovering material based on guessing, right? They basically just guess. Based on my guess, this material and this material could be good, and we should do this synthesized route.
Oh, wow.
But with machine learning, with data analytics, and also high performance computing with GPUs powers and TPU powers, all that stuff, and GAN networks, for example, you can actually predict molecule in a way faster speed than human, and you can actually synthesize the material with robots at the lab at a way faster speed.
Like 3D printing or something?
Like synthesizing, right?
Wow.
Yeah. So, I mean, that's one example, right? For example, another company we invest in out of Irvine, without mentioning the name, is making a new semiconductor design. It's a chip for local inference. So it's basically for ultra low power inference chip. For example, their first product is a chip that can actually enable always on inference, voice inference on any small device, meaning you actually don't drain any batteries to have always on listening functionality. Right. So, and the architecture they use is called a processing memory. So it's basically a architecture of you're putting the processor inside the memory, and that dramatically reduces the power consumption with the chip. Right. So, and that's another example. Right. But and this also, for example, I think we talked a little bit before the podcast. BCI, brain computer interface.
Yes.
It's a fascinating area.
Now that is for, I guess, the more mainstream terminology would be like what Elon Musk is doing with Neuralink.
Yep.
That's a really good segue, because the last time you and I talked, I asked you when are the robots taking over? When is Singularity coming?
Yeah.
And you said that having full AI that is just like human, thinking on their own, is most likely, almost certainly, not going to be happening in our lifetime. Now that you've seen the progression of Neuralink, do you still feel like we will never in our lifetime see an AI that has the same potential as a human being?
Probably. I'm still thinking that way. I mean, Neuralink is nothing to do with AI. It's just it's an interface, right? So basically a chip to collect your brain signals, right? But in terms of AI, I just don't think we can. I mean, it will eventually might happen in the future, but our lifetime, I think it's very tough to see the singularity happening, right? I mean, for different reasons, right? But
do you have any other theories or point of views on the future of tech that you want to share with the listeners today?
I mean, to be honest, I think if I really do have, I would just start that company versus being a VC. That's my honest answer. But I would say I don't feel like there will be actually a dramatic change, because all science and all technology is incremental, right? So you won't see any. I mean, even though you feel like it's a sudden change, a sudden improvement, it's actually the incremental steps, right? So there's no such thing called sudden change in the science community, right? It's all incremental. Even for the Elon Musk's Neuralink, right? If you actually read the literature about the chip they developed, I mean, it is basically the years of research already happened in UC Berkeley, for example, right? It's one of the research based on Berkeley's lab, right? So I mean, it's not suddenly happened because Elon Musk spent $100 million and started doing this chip, right? It's happened for the last 20 years. but people don't talk about it because it's not sexy to talk about papers, right? But the inflection point is they have a chip ready to do BCIs, right? But you'll always see something happen, but it's slowly increasing the speed, right? So, but I would say, you know, I in my opinion, I think automation, robotic will have a lot of play in the future, and it will actually replace a lot of the, you know, the intense labors field eventually, for sure. I would say the new chip design will actually help a lot. New sensors to, you know, autonomous driving, for example, will actually change our life. And so there will be some things happening that could dramatically change. But, you know, if you have to ask me what's the next big thing, maybe quantum computer, maybe a thing. Although that's questionable, it's going to happen or not. But yeah.
Well, that is an awesome way to end this episode of Demo Day. Yipeng, if people, whether they're startups, founders, VCs, LPs, whomever wants to connect with you or Embark, what's the best way to get in contact with you or learn more about Embark?
Yeah, I mean, you know, you can shoot me an email or connect me on LinkedIn as well. You know, I'm always available on LinkedIn. Shoot me an email. Shoot me an email at yellow p at people at embark.vc.
Yes, thank you guys so much, Yipeng. Thank you for joining Demo Day. I'm Sean Goldsman, founder and CEO of Coefficient Labs. This is Demo Day.
Thank you.
Thank you.
Thank you for having me.
I think because I knew that I didn't have anything to fall back on. So I didn't have parents to fall back on financially. I didn't have a safety net. So it was very much make this happen, and you don't have another choice. And when your option is to succeed, period, then you often do.